On behalf of Crosscheck Media and BizTalk Today TV, welcome everyone to the Money Path. I am your host, Todd Schoenberger, and joining me today is Rob Thummel. He is the Senior Portfolio Manager at Tortoise Capital in Kansas City. Rob, welcome to the show.
Hey, thanks for having me, Todd. Good to see everybody.
Absolutely. Well, we gotta start about oil. I mean, you are an oil expert. We see oil is spiking high today, mainly because of what has taken place in Qatar with Israel bombing, looking at killing the Hamas leaders, and now Trump is jumping in, and obviously we heard about what took place in Poland with the Russian drone missiles. But what do you think on this oil price right now? How is this going to impact the everyday American?
Well, so oil prices obviously have come down. They've been down a lot this year, and that's been a great thing for us as Americans because gasoline prices have been down. It's helped keep inflation lower, and frankly, Todd, we think that oil prices are probably going even lower from here. Yeah, there's some geopolitical disruptions that are happening that could cause some geopolitical risk. But there have been no supply disruptions globally. And instead, what's happening is OPEC Plus and other countries are increasing the global oil supply right now. And so we're going to have an oversupplied oil market really in the second half of this year and even into next year. And so we think what that means is lower prices for oil. Now, for consumers, that's a good thing because that means inflation's lower, gasoline prices are lower, that could boost demand, and eventually this market will get rebalanced and oil prices will likely move higher, but we've got probably a lower oil price environment here for a little while.
So with that said, and you're right, we haven't had that supply disruption. We haven't had a Cat 5 hurricane, for example, nothing like that. But it's a wild card in the Middle East. So you just don't know what's going to happen. The question I have though is there any catalyst that's out there that could cause, I know we saw the spike because of what took place from Israel, but do you see anything that could actually turn the trend here and maybe see a prolonged period of higher oil prices?
Well, absolutely. So Russia is the answer to that, Todd. So Russia is the third largest oil producer in the world. If there were sanctions, sanctions that were implemented that reduced Russian exports significantly reduced Russian exports, that would cause obviously the global oil supply to decline and could decline materially. So if you saw a significant decline in Russian exports, that would result in higher oil prices for an extended period of time.
Yeah, we had Jim Bianco on Buy, Hold, Sell yesterday, and he did bring up Russia. And he said there's only one sanction that will work and get them to the negotiating table to end this war, and that is a sanction on oil. My question, though, for him, and I'll give it to you as well, is that China and India are the number one customers for this Russian oil. So, us putting sanctions, what does that mean that we put sanctions on? We can't prevent them from exporting oil, but is there some other element that I haven't quite figured out yet?
Well, I think so the answer to your question is, I mean, obviously China and India are just buying discounted, cheap Russian oil, right? That Russia is willing to discount, and so China and India, I think, are fastly filling their supplies because they know that there's this opportunity here to buy really cheap oil. I think indirectly you can put sanctions on the individual countries, right? India and China themselves, and I think that's what's been talked about as a mechanism, both in the U.S. and by Europe as well, as a way to have Europe or China stop buying Russian oil, because I agree with Jim, and I think your statement is very clear. The Russian economy is driven, a lot of it's driven by oil, commodities, natural gas, commodity prices, and so a decline in volumes and price would definitely dent the economy and hopefully cause some change.
Okay. Okay. So let's stick to the bearish tone here because I know you're bearish on the oil sector right now. The Financial Times had an article that was quite pessimistic, actually, talking about the thousands of people that are being laid off in the oil industry, particularly with the big three oil companies, Chevron, ExxonMobil, and Conoco. What is going on? Because, I mean, this has always been a sector, regardless, has always just been a steady Eddie over a period of time, but it does seem that the industry is deteriorating. What do you
Yeah.
think this is the cause? What's
Well,
causing this?
no, that's a good observation, Todd. Here's what I would say. First of all, the workers and the people in the oil and gas sector have done tremendous things in the U.S. This industry, the oil and gas industry in the U.S. is weird. The U.S. is the largest producer of oil and natural gas in the world, the largest energy producer in the world, the largest energy exporter in the world. That's obviously all because of all the hardworking people that go out every day and perform these jobs. So yes, is the oil patch shrinking in terms of people? Yeah, it is for a couple of reasons. Been a lot of consolidation over the last couple of years. Exxon, Chevron, ConocoPhillips have been buying lots of companies and consolidating the number of companies in the Permian Basin and other areas around the U.S. And so you just need less people. There's efficiencies when that happens. Also, if you think about what's happening, the price is low, right? The oil price is low. And so you're starting to see the rig count of oil and gas decline. What does that mean? Well, that means there's just less oil and gas drilling that's happening. This is temporary. It's just because the oil market is oversupplied. We need to get it back in balance. But that if you have less drilling rigs, then you're going to need less people in general. And then, of course, there's AI. AI is helping improve oil and gas drilling, and more data is improving oil and gas drilling, and you can do it with less people. But you know what? I think these people are perfectly suited. We need a lot of people to build all this AI infrastructure as well, and a lot of these engineers and oil field personnel probably can change careers, and that's dangerous because you're going to need oil and gas people, professionals for a long time. So you don't want too many of them to leave the workforce because you're going to probably need them back at some point.
Yeah, that makes sense. So, with the cost cutting that's taking place, typically Wall Street likes it when companies start thinning out their staff because that means their bottom line numbers are going to look that much more healthier. Even though you're bearish on the sector, what about the oil companies as investments? I mean, should that be an area that perhaps Tortoise investors should be looking at, or anyone else?
Yeah, no, I think it is a great area to look at from an investing perspective, Todd, because for the reasons you're talking about. So what the companies are doing, the management teams are doing at all the oil companies and really all the energy companies, and they've been doing this since 2020, is focused on generating free cash flow for investors. And the energy sector, a couple things from a valuation perspective. Every sector in the S&P 500, it seems like every day is setting new records for valuation. The energy sector is not. It's still trading below where it's traded at historically, and nowhere close to where it's been from a setting an all-time high perspective. So it's a cheaper sector relative to other sectors in the S&P 500. In addition, the sector's got a lot of free cash flow, and part of it's for the reasons that unfortunately that we're talking about here. The sector's been very disciplined with capital, very disciplined with being an efficiently run sector. But that means for investors, a lot of free cash flow, so a lot of dividends, a lot of dividend growth, and stock buybacks, which generally is rewarded by shareholders on Wall Street.
Yeah, no, there's no doubt about that. And I do know some of those companies, they have continued to increase their dividends as well, which is always a healthy aspect of that sector. Let's turn the page though, because I know you're pessimistic on the oil industry or the oil sector, but there is another sector that you're very positive about. Can you tell the audience about it?
Sure, Todd. So we think at Tortoise, we think electricity actually is the new oil. So if
All
you look
right.
forward, yeah, so electricity actually is really exciting. So obviously artificial intelligence and the applications, they're multiplying every day. There's new sources every day. Businesses are utilizing AI. But what a lot of people don't know is behind AI, you need obviously the technology, but you also need the electricity. You need energy. You need electricity infrastructure. And so that's what I'm at Tortoise as an energy expert. We're really excited about is the opportunity for electricity. Electricity demand in the U.S. is actually going to grow for 2 decades. It's been flat. It's going to grow, probably be 75% higher in the next couple decades from what it is today. So that's a lot of growth that's really unexpected. That's not being really reflected in the stock prices of a lot of these companies to generate all this electricity that's really essential and needed for the development of AI.
So you're looking at it primarily just because of AI. That's the proxy that you're seeing because that's the bullish call on electricity.
It's AI. It's reshoring of manufacturing. It's the potential for more electric vehicles. So there are a lot of components to it, but AI will be the biggest driver.
So on the, you mentioned onshoring and that whole restructuring, is that because of the current administration, or is this something that the United States is clearly has a position on for the next few decades?
I think it started the last administration, but it's definitely been accelerated with with this current administration and in wanting to bring back industry to the U.S. And one of the reasons why we can do that, obviously, you need political support, but also, by the way, it comes back to energy. Energy goes into everything, and the U.S. has low cost energy, and that's really what's needed, or as a foundation to bring back manufacturing. You need a foundational low cost energy base that will allow manufacturing to come back to the U.S. And then the net result is you can produce things here, and it doesn't have to be so inflationary. So hopefully the energy sector has contributed to that, and we think the energy sector has done a fantastic job of lowering the cost of energy in the U.S. so that it creates opportunities for reshoring and AI development, more importantly.
So on the electricity side, if an investor wants to invest in electricity, what do you recommend?
Yeah, well, we like a lot of these independent power producers, companies like Vistra, NRG, Constellation Energy. They're generating a lot of electricity. They have their facilities that are located in some of the key regions where AI is being developed, where these data centers are being built. And Todd, they're building these data centers. They're massive. They're building data centers the size on land footprints that are the size of Central Park. So there's going to be a lot of electricity needed. And so the companies that generate the electricity, distribute the electricity, like a Vistra, like an NRG, like a Constellation Energy, those are the companies that are going to benefit from this as well. The other area that we've seen is conversions. I've been talking about this, but there are Bitcoin miners that actually have the ability, that have access to electricity, that are actually converting from Bitcoin miners to data center operators because they have the electricity that's available to them. And so companies like Riot Platforms and TeraWulf, so names you probably haven't ever heard of, or your viewers haven't ever heard of, but take a look at them because they're really interesting transformational stories from Bitcoin miner to data center operator.
Okay, yeah, I will, and we'll include these names in the description as well for the audience to take a look at. So that'll be great. Rob, any other last minute thoughts here on either electricity or oil?
Well, the only thing I would say is as an energy investor, a longtime energy investor, over 30 years in the sector, I think it's one of the most exciting times to be looking at investing in the energy space that I've seen in my really 3-decade career.
That's amazing. That's great. Well, hey, that's a bullish call right there. I think that's awesome. So that's super. Rob, I want to thank you for joining me today. This was fantastic. We got to get you back on buy, hold, sell as well. I know we'll have a little bit more of a longer form interview there, and we could get into some more of these names, but I appreciate you taking the time.
Thanks for having me, Todd.
All right, so on behalf of Rob Thummel, I am Todd Schoenberger. Thank you once again for joining me on The Money Path. Later today, we have Erin Gibbs, who will be on Buy, Hold, Sell at 4 o'clock Eastern. Definitely want to hear what she has to say about the record highs in the market. So thanks again, Rob, and we'll see you next time. Take care.